Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Hope you everyone enjoyed their nice long weekend. I'm Spencer Israel here with Joel Elconin and Dennis Dick, back for another fresh week of Benzinga's pre-market prep. On today's show, we're going to talk about, since we had no show on Friday, we're going to do a quick little recap of the eventful Thursday we had in the market, but we're going to get to the movers of the day. That's the more important stuff. Eli Lilly has some news this morning, so does MoneyGram. We have earnings this morning from JB Hunt and After the Bell from United and Netflix, and some big movers in ratings land today as well, and a couple other M&A headlines to discuss. Our guest today will be Tommy Lackey. He is the managing partner and portfolio manager at Relativity Capital Advisors. Joel, how was your nice long Easter weekend?
Not too bad. One more day of matzah here, half a day before I break the old Passover, so looking forward to biting into a nice piece of bread. S&P futures, we were kind of sleepy, holding a 5-point range. We're starting to rally up into the 2330 handle. One number on the upside I'm looking at is 2333. That was a pair of lows from last week. On the downside, no further damage until we take out Thursday's low of 2324. Crude trading down 36 cents this morning at 52.82. Been hanging up here in the higher 52 and lower 53 handles. So we'll see if we can bust up, perhaps get to that 55 area or go back down and test 50. Gold and silver are in the green, but not as much as they were overnight. Little tension worries over the weekend about North Korea and their bombing attempt. Gold got awful close to that $1,300 level, $1297.40, back off, almost $10 off that high, and silver well into the 18 handle at 18.55. That's up almost a nickel. Dennis, how you doing on this Monday morning?
Looking at a little market bounce back there after a pretty weak Thursday there. Had a pretty good Easter weekend, so how's it going there?
It's going okay. Let's talk about that price action here on Thursday. Seems like so long ago. We were just hanging out, and then the Moab, the mother of all bombs, was dropped here, and that coincided. Let me go back to Thursday here. That's really when the market started to lose some steam here. Kind of closed near the lows and took out some important support. Did you see anything moving in individual issues?
Well, what I really noticed was, we had some strength in the banks at one time on Thursday. If you bring up a chart of JP Morgan, and obviously we had the earnings reports here that were putting us all over the place too. But, look at JP Morgan right off the hop. Had the $85, ran all the way up to almost $87. And then it turned around on a dime and closed heavily in the red. So you had some stocks that had decent earnings report. We know Wells was under pressure there because Wells was obviously trading down, and Wells actually, closed right near its lows there. So it had a disappointing report. But then you had JP Morgan and obviously Citigroup both reporting pretty decent quarters, but still giving back all the gains. And that is somewhat concerning there when you're selling stocks off on good quarters.
Oh, exactly. And if you want anything to focus on concerning about the continued run in this market, number one, it has to be the financials. We just got no bounce when we had that breakdown before. Here we are sitting at the lows of the move. Goldman never even told you it was thinking of going up. Of course, you got earnings tomorrow, but Goldman Sachs, muted bounce off the low. Same in Bank of America, who we're going to have reporting, I think, tomorrow morning. And you want to know another stock just getting out of the financial sector. Have you seen your U.S. Steel lately, Dennis?
What happened with U.S. Steel?
In the last two sessions of last week, it went from had a high of 34 down to 29.5.
Yeah, crazy movement. And we know, that is a crazy couple of days moves. And that was what was the news on that thing? What was I'm already forgetting. It was something with, Spencer, you can probably help us out. What was some accident or something with the
Yeah,
steel?
Be a little
U.S.
more
Steel?
specific. Oh,
Gary, Indiana. There was, I believe, some leakage from one of their plants into Lake Michigan. I know I saw that later in the week. I'm not sure if we have picked it up on Pro. I think that's one thing that I saw in the news that could hit it. And I just think it's, just lack of buyers, too. I mean, this thing had a big run up, expectations of that big old wall being built with practically all steel, I guess. And now I think it's just more buyer no buyers around.
I think they did announce on Thursday night after the close. Think I saw it go by my timeline that they whatever was the cause of it. They fixed it now. So that's one thing to consider if it is fixed actually now. That maybe this thing could stabilize at least because the stock's been down almost 20% here in the last couple of sessions. So we are trading up here on U.S. Steel this morning. It is trading up 1% in the pre-market. And obviously keep in mind all these steel stocks tend to move together. I mean, AK Steel is one to talk about too. AK Steel, which was actually rumored a while ago to be a potential takeover candidate here, has had a really bad 2017. The stock started the year at $11. It's now trading in the 6 handle here, AK Steel. So it's been really beat up. And we had the big run up in November, obviously starting from the 5 area, and then Trump got in and we ran up on all the steel stocks. Well, just quietly, AKS has given back 2/3 of the move.
Well, I think it's just the infrastructure plan. I mean, that was a big talk, a big part of the election, and now it might be, 2017, 2018. Who knows? I think that's what a lot of the move was predicated on. Also, we talk about moves when something just unusually goes from $4.50, $5, and over doubles within a month. Then you stall out. You start to come down. Now we're retracing. I mean, we got a gap to fill from just around the election, around $6. So maybe that's a point people start getting re-interested on the buy side in AK Steel. Jimmy A read about some disturbing tweaks from Huntsader on some crazy exchange fee increases. Dennis, have you seen anything about that?
No, I'm not up on that story, but I've been away from the markets here for 3 days, so I didn't see whatever tweets you're talking about. You can enlighten us, but I'll just tell you, 'cause exchange fees are unbelievable. I've complained about exchange fees on this show for 2 years, and it's just gotten to a ridiculous level. If I go back, 10 years ago, as a professional, I didn't pay anything for quotes. And now, I don't even want to know. I've added all up what I'm dropping in quotes a month, but it's got to be getting close to $1,000 a month that I drop just for quotes, just to get the quotes that you want to get there. It's gotten to a ridiculous level there, especially for the professionals. I know on some of the retail accounts they catch us some deals, but maybe they're going to start hitting the retail traders with exchange fees too, or increased exchange fees. But it's been ridiculous for the professionals for a long time. What do you got for me, Spencer?
I was going to say, here's how it started. This was yesterday.
Sure.
This is kind of the first tweet in his tweet storm. Any Bloomberg terminal that gets real-time U.S. stock quotes will soon face $9,000 a month in exchange fees.
I don't know where that's coming from because
That's coming from the SEC.
You have an SEC link for that?
No, he linked directly to the SEC. Hunsader.
Okay. Well, I'm not. That sounds ridiculous. So I don't know how it can be $9,000 in fees. Nobody's going to subscribe to it. So obviously, I'm complaining about $1,000 a month. They're going up to $9,000 a month, and we're not. No, nobody's going to have any quotes. So I can't see how they could push something like that through. So just because
let me parse through this filing because he linked straight to a SEC filing.
Read the filing, but
I mean,
there's no way that people are going to start paying $9,000 a month for for quotes. There's no way that they're going to lose all their subscribers. So there's no way that can happen. I mean, you're talking, and right now, just for instance, if you have a terminal. Or if you have, and not even just a Bloomberg term, if you have any type of, as a professional, if you have any type of service that's providing you real-time quotes, you've got to pay the NYSE if you're doing obviously NYSE quotes on the NASDAQ and for those quotes directly. And for me, I think I have 3 separate spots, and I think the first one is $125 a month, but then if you have 2, then it cuts you a break, and I think I have 3 right now. So I think I pay about just to the NYSE, I think my bill's like $220 a month. So it's not fun, and that's to ICE actually now. Because they've got the all exchange. But if you're going to e-mini quotes and you're getting all those, and I've talked about that for a while. I canceled my e-mini quotes because I was going to be over $600 a month to get them. So, I just use the SPY because I feel like the SPY is just as good of a vehicle. It's open from 4 to 8. It's very efficient. High frequency traders actually have that trading with a penny spread, even in the pre-market there. So I get just as good feel just watching the SPY as I do the E-mini there. And overnight, you can grab it, the E-mini quotes from your CNBC app, or you can get it from somewhere else. But as a pro, I just don't want to pay 600 bucks a month for the quotes. But 9,000. I mean, everybody would stop getting quotes. I just can't believe that's going to
All right,
happen.
yeah, I haven't had time to parse through this yet. I'm just seeing this
Yeah,
morning, and so
I'll take a look at
I'm
it.
taking Hunsitter at his word for right now. But what he's saying is this there's no distinction now between retail and pro and institution. So you get
Well, and I don't argue that there shouldn't be a distinction, between, because I don't think it's fair that as a pro I got to pay all these extra fees, and if I was a retail trader, I pay $4 or $6 or nothing in some cases. Like, so so that's not a, but there's no nine, like I don't pay 9,000. Maybe if you're like a high frequency trader and you've got a lot of different feeds coming in there, it could be a different story too. But I can't see how you could charge Joe, like Joel. Would you pay $9,000 for quotes? Joel?
I'm
Joel's
in
on mute.
shock
He can't
here.
do
I'm in
this
shock.
happening.
I'm in shock. No, I mean,
You wouldn't.
no. I mean,
Nobody's gonna keep getting quotes if it goes up to $9,000 a month. So there's no way that could get pushed through something like that, in my opinion.
well,
But
also
I
to
haven't
me,
read any of it either here
yeah,
yet. It's been a holiday weekend. We've been away from the markets. Let me dive
I,
into this maybe tonight
yeah.
or today, and I can come back with you on my thoughts on what was said here over the weekend. But I can't see quotes going up to 9,000.
the only thing that really makes me skeptical of this is this going to happen, under, a Trump administration? I mean, if this seems to be, if you can get anti-business, anti-banks, and, anti-investing, I mean, I think that this is something that, I mean, if that went through, it would absolutely kill the market. There would be, I mean, absolutely,
Nobody would get quotes. It can't. You
yeah.
can't charge just anybody $9,000 a month. The professionals have always been dinged, so it's kind of scary for me. If my quotes start going up to 9,000 a month, I don't know what I'm going to do either. That's absolutely insane. Like I said, with everything that I'm adding up here, I'm probably 700-800 at least a month just in quotes. And obviously, that you can maybe cancel some services or something like that, but you still need to get market information there. And I don't, like the fact that it's because I have a prop license that I got to pay more than everybody else. I don't really think it's fair. But either way, we'll deal with what happens. But if we went from $800 or $1,000 to $9,000, well, that doesn't make any sense at all. It's going to put everybody out of business.
Yeah. Wow. Wow. Thanks, chat, for getting us.
Thanks for
Some.
ruining my
Yeah.
Monday.
Yeah.
After a good holiday weekend, my Oilers team wins and everything. Now you're telling me I'm going to be out of a job. Let's move on because the quotes aren't $9,000 a month here yet. So
Let's talk
enjoy
about them while we
ourselves.
can.
Let's make some money before they go up to that. Okay, so and there is some individual stock news here that we do want to touch into. And if you come in this one, you'll see Eli Lilly, LLY, and both INCY getting killed here in the pre-market. Lilly is down now 5%. INCY really taking it on the chin. They are down 15 points or 11%. There's some drug news here, Spencer. What is the Lilly Insight drug news?
The FDA on Friday declined to approve their arthritis drug, Olumiant. Is the headline?
And they
there.
have that drug together?
They have
Lilly
that.
Insight?
Yes, they do.
Not good news here, obviously, for INCY and Lilly here. Joel will break down some technicals, but this is a pretty good shellacking. Let's jump to the big one here, INCY, because it's down 15 points here. It's been on a little bit of a run just over the course of 2017. Started the year at $100, ran up to over 150. 140 is where it's settled. It's down 125 here now, Joel, so giving back a lot of the move. What are your thoughts, INCY?
Pre-market low, 2184. I'll show you the daily in a second, but in order to fill a gap, that does fill a gap. You gapped up from 122.14, so I kind of like the way this is looking now. We're almost 4 points off the low, so I still think this 121.84, 122 level will be protected. Finding resistance if this starts to go in the rally, I'll leave that to an expert like you, Dennis. Looking at Lilly here. This one, pre-market low, 80.80. I would look at that $81 level. I'll show you on the daily chart here. You had a low in the lower 81s. This was going back. When did you have that spike low at 81? Looks like that was in early March. So now they're low. I'm keeping an eye on those levels. I'm not more of an area to to cover a short. Below 81, you got another double bottom at 80. So big shellacking in these stocks, but big thick
Yeah.
stock like Lilly. I mean, how much stocks are going to take it to move 5 points intraday?
Well, it's slowly trading 171,000 shares, and I'll tell you one thing about Lilly. On drug news, it does tend to move. So,
Okay.
this being, drug news here, I'm going to wait for the dust to settle. I'm not going to say Lilly's is going to bounce right back here because we know sometimes when drugs, news comes out, sometimes there is follow through there. So I'd say caution to the person who's jumping in here with two hands saying Lilly's going to bounce right back because we're seeing Insight obviously down significantly as well. And this would have been a big drug for these companies, And you wonder, if there's going to be somebody else, that might benefit from this. I do see in the pre-market Gilead is trading up substantially here. GILD. I'm wondering if that they might not have a competing drug. I don't follow. I don't follow this closely here, but just when I'm seeing Gilead trade up pretty good, I'm wondering, if that's, maybe a case. Also trading up in the pre-market is AbbVie, ABBV, and that's trading up 1.5% in the pre-market as well. So you do have some drug stocks going up here in the pre-market. So interesting, that that's happening. Obviously, when you get Insight and Lilly really getting hit here this morning.
I should clarify that it is Lilly's drug, but as a result of the approval, Insight was eligible, I should say, to receive a $65 million payment. So it's not their drug; they're just going to receive a payment. It was Eli Lilly's drug, but all that
Okay.
is moot now. So.
Is 65 mil that important to Insight? I mean, for it to knock it down, I don't know, Dennis. You could figure
Apparently.
out the market cap on that, but you see overreactions a lot in these. Let's see. I mean, number one primary thing is holding that pre-market low. If it, you take out the pre-market low, continued downside, but those overshot levels a lot of times are good to keep an eye on.
B. Morris asking about UAL. They will report here after the bell. Also, Netflix is going to report after the bell here, too. We got a pretty busy earnings season kicking off here right now, so we're going to get into the heart of it real soon. Let's preview UAL a little bit, though. Obviously, been in the news. We all saw the video. It's had some bad publicity here. Got hit the last couple of days coming into the report. So, what are you thinking, technically speaking, as we're going to get UAL earnings tonight?
Well, I'd be hands off until this thing can clear $72. That's kind of when things got started. You got a high near 72, so I'm looking at that as a major resistance area. Coming on the downside, the lowest they've hit this thing since the whole controversy started is 68.36. So really, in that $4 range, anywhere could go absolutely anywhere, and it does. UAL is a mover, so I just kind of hands off on that. 68.72 looks like important areas to keep an eye on.
How amazing!
And then
How amazing would I was going to say? How amazing would it be if after all these shenanigans, they blow the numbers away?
They could.
For the quarter.
I mean, obviously, last quarter is going to have nothing to do with
obviously,
what's just
of course.
happened here. So.
I just think it'd be hilarious. It would be. I'd find it to be hilarious.
I wonder
if
though if people don't sell that pop. If it does, blow it away, and you do see a nice pop like UAL pops 5 or 6% on a good report. That there isn't a lot of people saying, yeah, but what about next quarter? So I and maybe they'll say something about next quarter in the report. Everybody's gonna be watching it anyways. UAL is gonna get a lot more attention than it usually does after this report. That's for sure. Netflix going to report after the bell as well. This stock has just been hanging out here, I'm telling you, Joe, between 140 and 147 for the better part of the entire year. It usually moves, and I didn't price the straddles. The options aren't open here right now, but I'd imagine, Netflix usually has a pretty pricey straddle on there. I don't know if you had, the closing prices from Thursday that we could look back to try to figure out what they think the market thinks is going to move on the report.
We can always do that. Let's take a look here at Netflix. You want to take a guess? I mean, where did go out at? Went
out at 142.92.
I'd say they want at least $13 for the 142. 12 bucks. What do you say before I pull it up?
For the 142 put?
No, the straddle.
Oh, I don't think 12 bucks. I think that's too much. I think they'll probably want 6. I'm going to take you on half of that because it's been in consolidation station for a while.
You want to make a lunch bet?
Yeah, well,
I just pulled it up. The 142 call is went off the board at, let's call it 640, and the 142 put is at 550.
Come on.
I'm looking at it. I'm looking at
this. Is the weekly?
Let's see here. I guess, yeah. Let's see. Yeah. April, 4 days expiration. Yeah. The 140.
They want to price $12 on that?
Yep, 6 each
And
way.
that makes me want to sell it. Spice is saying it's 1065. It was on Thinkorswim.
Yeah.
So yeah, 11, 12 bucks. Nah, that seems way too much to me. That's why you can't buy options. You know what? Somebody's going to go out and they're going to buy the options. They're going to be right, and they're still not going to make money on the play. It's hard to make money buying options when they put that kind of premiums on them. I mean, this thing's been in a consolidated range here, 7, 8 points here for 3 months. Okay, sure, could blow it away, could pop 20 points, could blow it away, could fall 20 points. But even if it does that, you still only, if you're risking $10, you're only making $10. I don't think it's a good bet at all. I would not. In my opinion, I think that's a losing proposition.
Question
Buying that straddle.
question for you, and
Sure.
I want to add, and maybe this might be better for Nick. When they price those in, are they including like the after hours in the pre-market?
Well, yeah, it would. I mean,
It
oh
would?
yeah, for sure. Because it
Okay.
doesn't, and that's the one thing, and I've even said that on the show before, is, when I used to buy options, I used to trade options very actively 5 or 6 years ago. I don't trade them as much as I used to. I've just kind of moved on just to equities. I've just found that I've had better consistency with equities than I did with options. But when I had an option that was expiring on a Friday, and it was, let's say I had, just for instance, and we'll use Netflix just as a hypothetical example here, but let's just say, I had the 145 calls that were expiring that day on the Friday, and it closes at 4 o'clock at 144.50 on Friday, at 4 o'clock. I would throw out the stock to sell it short at 140. If I had the 145.50 calls, I'd throw the stock out after hours at 145.50. And if I get executed, I could immediately, if I sold stock short at 145.50, I can immediately exercise my call at 145. And somebody might be like, why would you ever do that? Well, if the stock's trading up a buck after hours, I can just take a free 50 cents there because I got short. So the after hours counts. I mean, these things, are right there, obviously. So, it's all about expiring, and they do expire now on Friday. So they have changed, we did research there. They used to expire on the Saturday. Now they do expire on Friday. But, right up with the after hours action, a lot of those options don't expire right at 4 o'clock.
Yeah, well, we'll see. I mean, as you mentioned, all-time high 148.29, running into problems just above 145 over the last week or so. Coming back on the downside here, I get that gap and go maybe was from earnings at the beginning of the year, but 140, that's been the major level of support here, going back better part of 2 months.
Okay, we do have some M&A action here, and this has been rumored forever. Abbott Labs and Alere, and Abbott was trying to get out of the deal, ABT, and it doesn't look like they're going to get out of it because they have announced officially this morning that they are taking out ALR here. Spencer, got a price on this for us? Abbott Labs, ALR, finally looks like this is going to be a marriage.
It would pay $51 per share. I think that's
Okay.
what I'm seeing.
Okay. So, and we got ALR trading up at 49.40 here right now. It's up 16%. It's one of your big winners here this morning. So, those people who have held on to Alere for a long time, and the sagas went on. And if you look, and you can see it out there, if you look at the weekly charts, you can see the big gap up at the beginning of 2016 when the stock went from $40 up to almost 55. That was the original takeover, And then what happened was they, found some stuff out, doing their more due diligence, and Abbott wanted out of the deal. And that's when Alere, you can really see that wild day that we had back in July when the stock had a range of $31 and $47 when they thought, that Abbott the deal was over. But, here Alere fought them and said, no, they want to get, and it looks like Abbott is actually going to take them over now for 51. So it looks like the saga is going to end.
Just another reference here, when you talk about when these deals are announced, the initial pop and before all the dust settles. I mean, here's one. I mean, it hung up at 53.54. This is a weekly chart for 1, 2, 3, 4, 5, 6 weeks. So if you would have rang the register at that time, even though with it getting taken over, it's still not at the same premium. And then, of course, who talks about, who wants to sweat it out when it's getting taken over, go from 54 down to 31.5. But we'll see. Still a little meat left on the bone here if that deal is supposed to go off at 51. 49.75 is a high in the pre-market. Dennis, is this a stock deal or stock in cash?
Spencer,
Do
do you have that?
we have a multiplier on that?
Is it a stock deal or is it a cash deal?
Let me look for
Take a quick
you
look.
real
Spencer will
quick.
take a quick look.
All right, but
In the meantime, we have other rumors, so we'll let Spencer go hunt that down if it's a stock or cash deal. But we do have STRP, which was your stock that popped huge there. If you want to bring up the chart on this one, Joel,
Wow.
Straight Path Communications. Remember, we got the big bit. Stock went from like $35 up to 90 and change as a takeover was announced from AT&T, and everybody's like, wow, what a premium they paid. Well, it sounds like Verizon is hungrier here because it was rumored breaking from Reuters on Thursday night that Verizon might actually come and top their bid. So we got STRP shareholders gaining again here this morning. STRP is trading up 15% in the pre-market. It's bid up here at 106.50 here right now. So I don't think we have any official news here yet, but the rumor was that Verizon's going to top AT&T's bid for Straight Path Communications.
And strike that theory of selling on the initial pop on this one. Just a deal coming out of nowhere to take it to $92 area. Verizon doesn't want to be left out, or else maybe they're just trying to stick it to AT&T a little bit, make them pay up a little bit more. But boy, this has to be the winner of the year so far, huh?
Oh yeah, that's boom. You think, wow, they got such a premium, awesome. The stock's 35 and goes to 95. Now it's at 107, and we don't even know. This is still just rumors here that Verizon's going to top the bid. The one thing to consider, you could say, well, why would they pay that much? Well, it's not much market cap. So, for Verizon, let's just go and look at STRP. We'll look at the market cap on where it closed. And, so this is a drop in the bucket for both these companies. If somebody really wants it, they could pay a hell of a premium. The market cap right now of STRP is only $1.1 billion. So you're not talking about a huge stock deal here, $1.2 billion, when you're talking Verizon, which Verizon's market cap, for instance, I'll just go grab it for you here right now, is $198 billion. So you're talking about a fraction of a percent of Verizon's market cap. So this is nothing for Verizon and AT&T. If they want to pay $2 billion, really it's just a drop in the bucket. So I think that's why STRP is getting bid up another 15 points, because AT&T paid such a huge premium. Maybe Verizon's really going to top them. So it's interesting, when you have these little small market cap companies, sometimes some ridiculous premiums can be paid, and that's what we're seeing here this morning. Potential for that.
I will be spending the remainder of my day researching 5G companies, is what I'll be doing.
I know. That's what you're thinking here too. And you look here and you wonder if there's some other ones potentially out there too. So, maybe we should do some research. We're going to have Tommy. Tommy's talking STRP is all about 5G. Maybe he's got some other companies there for us too, but I don't follow this sector at all. So, if you got some other 5G companies that you think might, get, potentially, be put into play on this, let us know here, chat. Somebody just said, Nokia has some 5G, but I mean, Nokia is a huge company, so it's maybe you'd be looking at some smaller companies as well. But interesting, when you see a company like that popping that much, they're really hungry for 5G.
Wow, been a nice move here. Let's see how shares of AT&T are being affected by this. It's been kind of quiet, not much action going on in AT&T. I'm sure we can look at the dailies. Nice support at 40. 40 to 41's been the range. Look at Verizon, VZ. Building some major support here in the lower 48 handle, and looks like you have a big seller at 49.
Let's jump over here just to earnings parade. So we had one stock here of note to report this morning, and it didn't report much, but JB Hunt Trucker, JBHT, did report earnings here. And Spencer, do you have that report?
I do. Q1 EPS for JB Hunt of 92 cents versus an 84-cent estimate, and sales of $1.63 billion versus the $1.64 billion estimate.
And we're looking at the stock trade flat here in the pre-market, 89.20, only 1,000 shares of trade. It is widespread too. Best bids way down at 87.07. Best offers up at 90.40. So you can say price discovery definitely still happening here in JB Hunt. Nobody's actually saying whether they really like or don't like this quarter here. So nobody's bidding it up. So hard to say in the price action after, but Joel can just break down the technicals. It's a little longer time frame if you're interested in diving into JB Hunt.
Yeah, weekday on Friday, 88.94 was your low, but the big number to keep an eye on is 88.70. That was a low on March 27th, so that's a big area. Just the only thing I want to point out on this one, I don't know what day, what was it, Swift Transportation, and who was the other trucker that merged with it that took it out? I can't think of what the name of it was.
Let me see.
But I believe that probably coincided with that pop.
Was it Night?
Night, correct. Yeah. So people got a little. What day was that on, Spencer?
Good call, Joel.
That was on April 10th.
Okay.
Yeah.
Yep.
Four sessions ago.
Yep. So you got that pop up to 94. So 94 is major resistance. Boy, it takes out that 88.70 low. Boy, you can see the big up days that it had then. So I don't know. Could find some air between 88. I don't want to say all the way down to 82, but definitely a major support level, very close to here in JB Hunt.
I'll take a look at quick imbalances here. They just came out at 8:30. HPQ, I haven't talked about that one in a long time. 110,000 to sell here this morning, so that is notable here. Twitter, which obviously is just Twitter, 31,000 to sell in Twitter. Ford is 73,000 to buy. General Electric 58,000 to sell. Eli Lilly's 28,000 to sell. It's probably going to grow a lot as it's down significantly in the pre-market. I do see Nike's got 47,000 to sell. That's about it. They're pretty small here yet. We'll give you another update, 8:55 on the imbalances, but they're pretty small yet.
All right, Nike just kind of hanging out. Earnings low. We bounced back. Couldn't fill the gap. Just finding a home here in 55 and a half, 56 area.
And well, I'm just gonna tell me real fast. The Abbott deal was an all cash deal. The Abbott
All cash deal,
yep.
51. Okay,
Yep.
so they're putting a little bit of a risk on there. I mean, we already saw a deal fall apart, so those risk arbs are probably, a little bit more cautious this time around because it fell apart already once. But it sounds like it's a done deal this time around.
And hat tip to Brent Slava on that. Thanks, Brent.
Cool. Ratings parade here. There's a few interesting ones. We got McDonald's, and full disclosure, I do have a position in McDonald's, so I'll limit my comments. I'll just tell you that Wells Fargo upgraded this morning here to outperform.
All right, let's take a look at Mickey D's MCD. We haven't taken a look at that one in a while. Just trying to bust out to a new all-time high here. You do have a double top here in Mickey D's. We'll see what we're doing here in the pre-market. Pre-market, we got a print at 131.70. Let's keep an eye. Where's that double top at? That double top, boom, right above there, 131.56, 131.58. Be keeping an eye, holding that level. And since we've never been to, we have been to 132. That's not the all-time high. All-time high, 131.96. So opening up in the area of major resistance.
A little bit of chasing price here, but Lilly getting downgraded to underperform at Bank of Montreal, and Insight getting graded at Piper Jaffray here this morning. So we've already talked about those with the disappointing drug news there. CMI also at Wells Fargo. I'm seeing it in my scanner there. It's getting upgraded here at Wells Fargo this morning. It has bid up $1. It had a rough couple of days here, 151 just a couple of days ago. 144.57 is where it closed on Thursday. It's bid up $1 here, 145.57 here on the upgrade this morning. Best offer is way up at 148.49, but it could be tough sledding up there as you get, towards the upper 140s just because people underwater from the last 2 days.
Yeah, and you chopped around a lot at 150, and then you had your highs on Monday and Tuesday last week. I know that's a ways away here, but just a level to keep an eye on long term. Also a nice round number like 150. So big resistance up here. Trying to get this off the low. Keep an eye on 44.54. That was the low from Friday. That also is in the area of your February low at 44.80. So big area of support. Despite the upgrades, if it takes that out, a lot of downside here in CMI.
Got a minute here before Tommy, so if there's any stock you want to talk about, chat, let us know and get your stocks ready for Tommy Lackey because he's going to be on here in the next minute. One stock that I'll just highlight here, and we haven't talked about for actually a couple of days here, is Apple and the consolidation that it's had here, which is interesting. We had, this run-up has been pretty incredible here, and I've been looking at my own investment portfolio, and I bought Apple back there when it was at 105 and $95. I've had it for a while, but I added to the position at 105 just in late 2016, and I'm looking at it, and it's been itching me for a while here, Joel, and I'm thinking I want to ring the register on some of this, but at the same time, it's just been such a strong uptrend here. I loved it from a valuation perspective. I still like it from a valuation perspective, but it's ran up a lot here in 2017, and valuation is not as attractive as it was when it was back at 105.
Yeah, I think I would call that you upgraded to your conviction buy list because I remember it got hit that day and you bought it with a lot of conviction. I can remember that. It only went a little bit lower.
About a couple times. I bought
yeah.
at 95 and I bought at 105, and it's one of the biggest positions in my investment portfolio here, and it's been a nice run for me. And these are longer term things and longer term holdings, but just when you have a run up in a company like Apple, that runs up 25% here in a few months, it seems like pretty good windfall.
Yeah, and the earnings season come up, so you never know what can happen on that. Double bottom at the 141 area, and a couple highs. Let's call it 142 and a quarter. So that pretty much represents the better part of 2 days worth of ranges there. So we'll keep an eye on that. All right, it is 8:35. It's time to bring on our Monday morning guest, Tommy Lackey, managing partner and portfolio manager at Relativity Capital Advisors. Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host Joel L. Connon, along with Dennis Dick and Spencer Israel, working the boards. And we now have Tommy Lackey on the line. He is a managing partner at Relativity Capital Advisors. Tommy, how you doing this morning?
Doing terrific. How about you guys?
We're okay. Getting back to this trading day after an extra day off here. Just thoughts on the general market. I mean, just Friday, I think the Moab bomb kind of hit us and kind of sold off, closed near the lows, not near the low of the move here. What are you looking to see if this is just another buy the dip opportunity?
Well, and I think that's what we have to kind of pay attention to here. This is the first time things have really started to show some cracks in a while. And last week being a holiday week and all that typically has a stronger bias to it, and we just didn't see that ever come out. So there is some worry out there, but that's the flip side of this whole scenario that kind of keeps me from getting overly bearish, is because when you look at most stats, put to call ratios, things like that, everyone is really bearish really quick. And we're within a few percent of the highs still. Last 4 or 5 times that's happened, it has not turned out well for the bears. So I think you've got to make the markets kind of prove themselves on the way down. But for the first time in a while, I'll go on that side and say that we certainly do have some negatives mounting up that could turn more bearish, but I think the sentiment has grabbed onto it a little too much already.
And how do you take account for all this geopolitical noise that's going on? A lot more headlines than substance here. Do you just try and put on the blinkers and ignore that, or how do you incorporate that into your trading?
Well, you certainly try, but you also try to, there's nothing you can do about when they're going to happen, because they're going to happen. And so it's a matter of trying to react as you can and trying to pay attention to how most of the market reacts. Whereas last week, as much as we didn't have a good week, we certainly didn't sell off heavy on news like another bombing in one place and a threat of one somewhere else, and all these different little factors in the past, I think, would have taken us down a little bit further than it did, and maybe a good bit further. But I think so. We got to look at that. But again, we've been on a strong run. From a technical perspective, there's reasons to say that if we don't hold these levels here pretty soon, this correction could get a bit deeper, maybe 5-7% versus the typical 1 to 3 we've been seeing.
And just one stock everyone they wish they owned. Straight Path Communications going straight up once again. AT&T going after it. Now it looks like Verizon's getting into the play for the 5G. Did you see any unusual options activity, or do you have any comments on this bidding war between AT&T and Verizon?
Well, if you remember last week, it was actually on the notes I sent y'all from the nitrous scan. but we were a few minutes too early, it seemed, since the deal was Monday. So that didn't really help us at all this time. But that's exactly what that scan is for, is to look at things that are accelerating, not things that are done with their move. And that would have been one. But the unusual options, no, because it's such a small name, small player. There really wasn't much that showed in there. I think it's basically the technology, though. Now you need to be starting to look for those sympathy plays. Unfortunately, I'm not prepared enough to have those for you this morning, guys.
All right, well, let's go something you're prepared to talk about, and Rent-A-Center. Recently cleared a base on restructuring news. Pop up, and it looks like it's taking a little break here. What are you looking at here in RCII?
Well, RCII is one that I think is a difficult kind of a look both ways play, as I like to say, because right now you did have this long base for a couple of months. You are getting a move up towards the middle of a more like 4 or 5 month or 6 month base. But looking at this particular chart, it's coming right into the falling 200-day SMA and also the downtrend line on the daily at the same time. And then this one's one that does have a lot of notable options trades in it, and every one of them bearish. Okay. Every single one of them is just loaded up on the downside. So it doesn't necessarily mean it's going to head back down, but I would say that until it got over that downtrend line in the 200 SMA, I wouldn't want anything to do with it. So I'd probably almost make it get over 11 before I'd start getting involved. But on the downside, I think it definitely could close the gap and potentially move further.
Yeah, that level that it hit last week at 1085, that coincides with a quad top at the 1075 area. So there's your major resistance. A silver play, something on your radar, and just quietly, silver's gone from under $16 up to 18 and a half. First Majestic Silver Corporation, willing to participate in the silver rally. It looks like 10 bucks could be a nice resistance area.
Yeah, and that's exactly. And this is one that basically, if you look at it on a moving average basis or with some of the indicators, its unbalanced volume is starting to grow a good bit as it's coming off these lows. However, this is one I'd like to see back around the 9 level for various reasons. One is that 10 level is right there, so I hate to buy right into it. And then at about 1050, you're going to be seeing your 200-day moving average. Now, of course, that is 10% from here. So if you're a short-term trader, that's not a bad trade at all. But it's one of those areas where if you're a longer-term person or you're wanting to see a bigger turnaround in one of these metals, you're going to have a few bumps in the roads.
Another stock with definitely an interesting name, Horizon Tech Finance Corporation. What a March we've had here from the $7 level back in March, and now knocking on the door of a high of the move here. What do you have here? Yeah, excuse me, I got the numbers off. HRZN, we ran up from $10 to almost $11.60. What are you looking for this rally to continue?
Yeah, this is a big base here, and this is one I'd almost say is not a short-term play. It would have to be a longer-term play, and I would rather see this thing consolidate back around about the 1130 area. Just cool off a little bit because it has come hard off the lows, but the volume has been picking up as it's been doing it, and the on-balance volume has been very strong on the way back up, so people are moving back into the name. But like I said, I'd like to see it cool off a little bit right here. Or get over those highs around 1175.
Yeah,
but you also, if it does that like today, you'd hate to chase that right here.
Yeah,
so I agree with you. It's on a good run, so just give it a little bit of time.
Yeah, 1170, or actually you had, on the daily, I'll just rip these highs off for you. 1165, 69, 66, 66, 70, 75, 70. Oh my God, you've had like 8-9 days in a row in that one area. So we'll see what happens with that. Moving on, a golf company here, Eli, Callaway Golf, ELY. Hasn't been in the news much as of late. What do you look? You looking for this to clear 1160?
Yeah, and that's basically, there aren't that many good-looking charts on the nitrous right now, and so this is one of the ones that kind of looks like it's been.
Tommy, you with us?
Little fade.
Tommy.
Tommy,
Do
can you
we
hear
have a
me?
little? Maybe we have a
Hello?
gremlin. Yep, Tommy. Okay, we're back.
Not
Okay,
sure,
sorry about
Tommy.
that.
I still had you the whole time, Tommy. So I don't know.
Okay. Well, on
Keep going.
EY, basically where we're at is over that 1160. Looks like a good spot to continue building the right side of this move higher.
All right, and one more stock, slow mover, Coca-Cola. What are you seeing in KO?
Yeah, Coke has been starting to get some options trades in it, more on the bullish side, and starting to move up there. And again, it's a defensive name typically if the markets don't do so well. And it's just been plodding along. It really didn't pay much attention last week. And at this point, as long as it doesn't lose, I would say maybe 42-ish, then you're probably in good shape on this one.
Let's jump over to the meltdown scanner, Tommy. CRAY. You're looking at this one here. This is a smaller company that I don't really follow, but stock's been kind of breaking down the last couple of weeks here, and now you're looking at it at this level here. What do you see, CRAY, Cray?
Yeah, I had a couple here on this one that look like this one looks like if it breaks this or can't get back above right here, we got a little small bear flag going. It breaks down from here, and you've got a gap close back around. Sorry about that. It's about 17, right at 1805. So you got about a full point here, 5%. And if it loses that, then I think it probably heads down and tests those lows of that same consolidation area around 16. And then from there, you look at a weekly chart, and that pretty much takes it down to its lows that we haven't seen. I mean, the lowest point we've seen since 2013. So it's a much larger top if it breaks that. I don't know much about the company, so I don't really know what they do.
Western Union just been hanging out at support. And it's interesting you got this on your meltdown scanner here, and a lot of people come in and say, "Oh, this thing's been at support. It's been down here multiple times. I'm going to do it again." I always say it gets down there 1, 2, 3, 4, or 5 times. Eventually, it might take that floor out, and that's what you're potentially looking for. If it does, you're ready to act.
Well, yeah, and the problem here is for the most part on a closing basis, it actually did take out that floor. And then we had a 3 last week, basically just tried to get back above it, and you got nothing. I mean, I know the markets weren't great, but really you got nothing as far as a bounce off those lows this time. Whereas the past times it has either hammered or bounced off of it fairly quickly. So I think at this point you're at a bear flag that you go below. You could say, I would say probably Monday's open, and then last Monday's open, and you basically can look at this one heading on down, and it's got its next bigger weekly level isn't until about 1850 area, and then on down from there.
Prudential, you got a little head and shoulders kind of looking. I was just looking at the chart here for 2017. I could say the left shoulder right around 108, the head up there at 114, and the right shoulder just formed at 108. Now it's starting to leak down here too. What do you see in the chart in PRU?
Pretty much what you just said. I mean, basically, it's not necessarily the head and shoulders thing is tough on that left shoulder, but you're right. I mean, it basically has a big sideways move there, consolidated. No one says a shoulder has to be high. And so it's a scenario here to where you just got a lot of volume in this area that it's starting to move itself under. And once it does that, then it looks for the next level. And I think this one's down slightly below 100. I mean, 100 is a big round number, so it may stop there, but I think slightly below there. And if you can't hold around 97 or so, 97 or 98-ish, then you get into where it moved up fast, and oftentimes those can get retraced just as fast if they don't hold. So I'd be careful with this one. I mean, this is a real strong player in its industry too. So I'd be surprised if it moved all the way back down to the low 80s. I mean, that would be a big surprise. But 98 is not out of the question if the markets don't shore up here.
We've been on the line with Tommy Lackey of Relativity Capital Advisors. He joins us every Monday. Tommy, thanks so much for bringing your scans. As always, we'll talk to you again next week.
All right, thanks, guys. Have a great week, everyone.
Thanks, Tommy.
All right, surprise guest right now coming up at 8:50. We're going to take a quick break, and we're going to grab Gordon Johnson. He is the Managing Director of Axiom Capital Management. This morning, Gordon initiated coverage of Canadian Solar CSIQ at a buy. This is the first positive rating on CSIQ since in about a year. It's been like 53 weeks to the
From anyone?
from anyone on the street.
Oh.
It's been a year of straight downgrades or market perform and equal weights. So this is really the first positive rating we've had on the stock in a year. We're going to ask Gordon why he is announcing a buy rating and an $18 price target on CSIQ, and we'll do that in just a moment. Welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. We're on the line now real quickly with Gordon Johnson. He is the Managing Director at Axiom Capital Management. Gordon, jumping right in, you initiated coverage of CSIQ this morning at a buy rating. You announced an $18 price target. Give us your reasoning for that.
Yeah, so we liken CSIQ today to First Solar and SunPower in 2012. And just very quickly, solar sentiment right now, we believe, is at an all-time low or nearing an all-time low due to prices, oversupply, or rather oversupply driving prices lower, and really no light at the end of the tunnel. And a lot of stocks have been battered. First Solar, SunPower, Canadian Solar, Sun Edison, etc. What happened in 2012 was, solar stocks had just gotten completely annihilated, and SunPower and First Solar, had a bunch of projects in their essentially their backlog that were significantly in the money. What that means is the projects that were being signed at that time were being signed at power purchase agreements that were maybe 10, 12 cents a watt. They had projects that had essentially PPAs that were like 30, 40 cents a watt. So those projects were very profitable. And what that allowed them to do is then go sell those projects into the market and recognize earnings that was significantly above their peers. And from mid-2012 to 2015, First Solar and SunPower stock gained 526% and 338% respectively. Everybody else significantly underperformed. Fast forward to today, we believe Canadian Solar is in a very similar position. They have a bunch of projects in Japan that have feed-in tariffs at basically anywhere from 26 to 36 cents U.S. cents per kilowatt hour. That's the feed-in tariffs, where fits today in the U.S. or power purchase agreements are being signed at 5 cents. So the point is this: when you value their projects, and keep in mind, we're giving very little credit to the bulk of their portfolio. We're only giving them credit for the most easily sellable projects in their portfolio. When you value the portfolio of projects they have, and you exclude their net debt, so that accounts for everything they spent on projects to date, you come up with a fair value of $18 per share, 41% upside, and we're excluding, probably, 3,000 to 4,000 megawatts of projects that they potentially could sell. So we think what's going to happen effectively is Canadian Solar is going to sell a bunch of projects going forward. Their earnings are going to outperform their peers. And we think people are going to get really excited about the stock. And when this happened with First Solar and SunPower, First Solar stock went from $11 to $70. SunPower stock went from $4 to $40. We're not calling for that type of move in Canadian Solar stock, but if this starts to gain momentum, which we think it will, when we say this, their earnings outperformance of their peers due to these project sales, we think that there's going to be a lot of excitement around this stock.
Gordon, I just have one question, and see if this has anything to do with the regulatory environment, perhaps with the new administration, Trump administration coming in, as opposed to, Canadian Solar being a solar company. In Canada, is there any politics or policies that are factoring into this upgrade?
Not at all. Not at all. It's just simply we had taken our eye off Canadian Solar for a while. And another thing to keep in mind is there's J-REITs launching in Canada. Effectively, what a J-REIT is it's a real estate investment trust backed effectively by solar projects. And there's one that's actually publicly traded right now, and the name of the J-REIT is Ichigo Green Energy or Ichigo Green Infrastructure Fund. The ticker is 9282JP. This thing is trading at $4 a watt and looking at enterprise value. So what that suggests is that investors in Japan believe the value of Japanese solar projects are at least $4 per watt. So Canadian Solar has a bunch of projects in Japan that were signed at very high feed-in tariff rates. These are legacy feed-in tariff rates that they're just going to benefit from. And there's investment vehicles that are spurring up all over Japan that are going to be willing to buy these projects. And very simply, we just did the valuation work on the projects, and we were very conservative. And I hate to sound aggressive, but we were shocked at how much value there was in these projects. And I think that's what's really the benefit here, and I think that's what's going to catch people by surprise, and that's what the market is missing.
All right, you gave us your conservative estimate at $18. So what would be like if like maybe half of these other projects come through? Could you give us a more aggressive price estimate on the upside?
I want to be clear. Our price target's 18, but okay. Assuming some of the projects we're not including in our analysis came through. For instance, we're giving them no credit for projects sold in Brazil, India, Australia. We're giving them no credit for projects sold in China outside of what they already have in operation. I mean, you want to say half? I mean, you're talking about probably $30-$40 in value in the stock.
Okay. All right.
And what's key is when they sell these projects, they'll make the announcement. So, I was telling our sales force today, in the morning meeting, I told them, look, we're going to get announcements, right? We're giving them no credit for Brazil. We're giving them no credit for UK, right? If they came out tomorrow and said we just sold a project in the UK for, $1.50 a watt, that's icing on top of the cake. That's incremental to our $18 per share in value that we're going to have to include. So I just think that people are looking at Canadian Solar like every other solar stock, i.e., everybody's moving away from the project business and towards module manufacturing. And we think that business is DOA, dead on arrival. We're giving them negative $60 million in value for their module business. We think their module business has negative value. But they still, unlike pretty much anyone else, Jinko just sold their portfolio of projects, so now they're a pure play module business. Canadian Solar is the only one left with projects that are worth money. And when you put some value on those projects and you do it in a conservative way, there's pretty big upside in the stock.
All right, Gordon Johnson, Axiom Capital Management. Thanks so much for hopping on real quick with us this morning. We'll talk to you again soon.
Thanks, guys. All
right. That's always fun getting Gordon on. So we have really the street's first bullish voice in as far as ratings go in about a year, and so like he said there, if they do get anything at all from excuse me, their Brazil or UK business, this could go higher.
Actually, he mentioned Brazil, India, Australia, China, and the UK.
Okay.
And he's giving that no value. So, I mean, if you want to keep an eye on headlines for CSIQ, I know exactly what I'm looking for here. Dennis, 3 minutes left here in the show.
Do you have any levels on that real quick you want to give?
CSIQ, pre-market high, 1350. We backed off to 1334. So, really haven't backed off that pre-market high, so that could be some continued upside. Interesting time to come out with this call, and let's see what our 4-day high is in CSIQ. I believe it's right in this area when we had this spike up a few days ago to 1335. Big area to keep an eye on here in CSIQ. Dennis, are you running out and buying some Canadian Solar?
You got me interested. So
me too.
I took note of it for sure. Gordon's obviously made some great calls here, and he calls a spade a spade. That's what we love about Gordon there, and he's not afraid to go against the crowd as well. A lot of these, he's been, he was very bearish on a lot of the solar companies when they were a lot higher there. So it's always interesting, and all of a sudden he gets bullish on a stock. You wonder, because he's made good calls in the past.
All right, 8:58 here, Dennis. Before we preview tomorrow's show, what's your one key to trading today? Your leader?
You know what? This is a tricky day here, and I'm looking, and the market feels like it wants to go higher, but then I'm looking at individual stocks, and I'm like, well, where? I'm trying to figure out where that, is going to come from. Because, okay, well, Ford is, looking like strong here this morning. 417,000 out of buying Ford. It's trading up over 1% in the pre-market. So, maybe you're going to get a little love for Ford and GM here this morning. But I'm looking just across the board. There's a lot of selling balances. They're not big, but there's, it's more skewed a little bit to the downside here. Even the banks are not taking off here this morning. Often you'll come in, you'll see, okay, the banks are driving us here this morning, but the banks are all trading just slightly in the green here. So, unless, some of these stocks start to really turn around, this might be a pop to fade. So, I'm kind of sitting here just looking, at the market trading up 5-6 handles here this morning, but I'm not seeing the stocks that are going to drive it here, at least early here. Stuff can change, and sometimes the stocks will eventually pick up the slack. But, as of right now, I'm not looking at the stocks that strong with the futures trading up 6.
All right, Ford, I believe, got a little love in Barron's, too, so that could be contributing
There you
to the rally. I'm just going to stick with the number I gave at the beginning of the show, 23.33. That was the area of a low from last week, and also that was a low from a couple weeks ago, along with your daily pivot, coinciding with the pre-market high. So that's our focus for continued upside. All right, 9 a.m., Spencer, you want to preview Tuesday's show?
Sure. Looking ahead to tomorrow's show, we have Nick Shaheen, as we do every Tuesday. Also going to be joined by Chris Martinson. He's the co-founder of PeakProsperity.com. And so Nick and Chris on tomorrow's show. Hope you enjoyed today's show and our chats with Tommy Lackey and Gordon Johnson. We'll be back with you folks tomorrow. Please remember, in the meantime, that all the information, material, and content from our show is for informational purposes only and not meant to be investment advice. Have a good rest of your Monday. We'll see you folks on Tuesday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.